Welcome to another Talking Technical, and it's so nice talking to you, and really thank you for all the support that we get. I know you can also visit our website www.fransklerk.com for all our services, but this is actually a service to the public. So if you've got this one or two requests, feel free to drop us an email always a day or two before we record the show, and then we'll do it gladly for you. Well, Bernard phoned in and he said, listen, can you maybe speak about the S&P 500. Now, first of all, I would like to show him, Bernard, look at this immense rally that we see here. Since 2010, can you believe it? This index was around 1,000 points, and now it's 2,885. So this is a phenomenal run. And remember, a lot of that was driven by quantitative easing. But if I look at this chart, suddenly you see this, like you almost see these erratic moves since about, let's say, start of 2018. Now, what you usually see when that happens, you're either going to see an erratic move like you've seen here, not a steady move to the upside or not a steady move to the upside. So it's either going to break to the upside or break to the downside. Now, there's two scenarios here. The one is, I'm seeing, first of all, let's maybe just show the viewers here. There is a tiny inverse head and shoulder maybe on the brew here. And there's your left shoulder and a massive head, and we're busy working on the right shoulder. Now, if that's the case, then we can see if it breaks to the upside. I mean, can you believe it that we can maybe go all the way to 3,340? That is if this neckline, now this neckline, you can almost see if we're going to extend this line in time to come, it will probably end up in 2,960. Then this neckline will turn into a support, and we can see a beautiful rally out of this inverse head and shoulder. There's the left shoulder, there's the beautiful head, there's the right shoulder. We're on the brink of developing that. But what worries me a little bit here is that if I do exactly the same and I just extend this line to the downside, let's just see what we're seeing here. And here suddenly we see a triple top in the making. There's a top, there's another top, and there's another top. And now this is the beauty. The guess is as good as mine that we do not know if it's either going to break to the upside or it's going to break to the downside. Well, if it breaks to the upside, we see that it can go well above 3,200. But the ugly part of it, if it breaks to the downside, let's just do that same thing. Then it can, that big support line is sitting at 2,370. If it breaks below that, can you believe it? This index can go all the way down to 1,900. So it's actually a case of we do not know. And that's what you usually see when you see a market that gives these erratic moves. Now, a lot of analysts usually say at the end of a rally, or you can almost say a constant move to one direction, you usually see these consolidations or erratic moves, and then the market will say to you, I'm either going to break to the upside or the downside. In actual fact, I think we may be closer than seeing an ugly move to the downside. And the reason being, it is just a fact that the market had one beautiful rally from 2008 all the way up to where we are now. And it's maybe just time that we see a little bit of a pullback so that we can just get some healthy valuations again. But I mean, there's some analysts believing that the S&P 500 still offers wonderful value. But for me, I'm a little bit worried because I see this formation, but I also see the other one. But I mean, after a 10-year bull market, well, let's have a look where it started. Well, you can see there. I just want to zoom it. And just to give you an idea, I mean, in 2009, right at the end, it was around 650 points, and now it's at 2,885. And we've seen in our market that you get to a point where a share or an index has just rallied too far, and then automatically you will see some sell-off taking place. Well, Chris phoned in and he said, listen, can you maybe look at the gold price? Sorry, that was John. Chris, I had another request. But let's have a look at the gold price. Because the gold price suddenly is showing some nice moves to the upside. And I can remember many years ago, you know, in South Africa, here in the 1980s, if we had a gold bull run, it was almost fantastic to see that run because it just carried on and it almost motivated everybody to buy. Now look what we see here. If you look at this gold price, and we've shown this chart before, let's have a look here. And I want to draw in this line, and this tells me, and that gives me an idea also that the S&P is maybe running into troubled waters, because what we see here is we see this massive consolidation. In actual fact, excuse me, in actual fact, we see this consolidation all the way from 2014. And I know Julieta once asked on the show, Frans, but how many right shoulders can an inverse head and shoulder have? Now, Julieta, and on that specific show, I said, well, sometimes you get numerous ones, and then you almost feel like it wants to fizzle out. But what we see here is we still see this left shoulder. Look there, there's two left shoulders here. Then we see this massive head, and then we see another double right shoulder. So the big thing here is I believe this level of 1,340. If that can break to the upside, look what we can see. We can first of all see, let's just do that extension there. We do that one from the head to the neckline. Now let's just do that. The first target of it will be 1550. And if it really goes out and it blows out to the top and surprise everybody, it can go as high as 1,650. Massive rally. Now, what we see here in South Africa, the rand is also weakening, and suddenly you see all these gold stocks ticking a little bit higher. And I'm positive about gold. While it's above, if it breaks this 1340, then I think we can see a beautiful move to the top. Some will actually draw the neckline in a little bit different, 1357, but I think let's call it 1350, then you will start to see action. And if you do want to buy gold, of course, we've got new gold that you can buy on the South African Stock Exchange, that is exchange traded fund, almost you can say reflecting the gold price and the rand gold price. And I think you'll only get worried about gold when it goes below 1,260 again. Beautiful chart. And why I'm saying this chart holds a clue for the S&P. Why will investors now suddenly go to gold if the S&P offers a lot of value? So I think that if the gold price is starting to tick up higher, some investors will say, listen, I'm going to go a little bit out of the value stocks that everybody say that's in the S&P, and I'll rather look for a safe haven like gold. Well, I must go to Mohammed's question before I go to Chris. And he said he couldn't believe us a few weeks ago when we started talking about Goldfields, and we said, well, Goldfields is looking attractive to us, and maybe we can look at it in buying it. In actual fact, look what happened here. I mean, there's Goldfields. If you take a little bit of a longer term chart, it just shows you that it's only started now, and it can go much higher. Now I can remember when we called the stock, that was when this, there you are, let's just draw that line in there. We saw this, there you are. We saw this pieces where it touched the lows every time at 35 rand. There were some buyers around. Look at it. But there was a beautiful, you can almost say, a falling wedge developed. And the classic buying level was at 44 rand 10 cents. At that point, this, you can almost say, falling wedge broke to the upside. And it gave us a beautiful rally. Well, I didn't know that it will go to 76.47. My first initial target was around 55. But that looks good. Now, it's just maybe another good illustration here of some charts. Now, some guys will, if I take this out, this line, say, listen, Frans, but look at the massive head and shoulder here. That is the head and shoulder. There you are. There's the left shoulder. There's the head. There's the right shoulder. This must break to the downside. And then Goldfields must go bankrupt if it plays out. Now, what you must sometimes just apply, just put a little bit of, let's say, common sense behind a chart. If you get a gold that's been under pressure for, let's say, 10 or 5 or 7 years, and it's rock bottom and it's starting to build a base, what is the chance for that gold price to halve? Or even a company like Goldfields, that they've got operations, they've got assets, and the assets looks okay, and they've, like in Goldfields' case, in South Africa, they've got the South Deep complex that we know that's got the richest air body in the world. Now, what is the chance for that company to go bankrupt? That's why I say, if you have a chart like this, just apply a little bit of common sense, and then don't go short below 32.91, and I've said it on the show so many times. If you want to short a stock, rather short it quite to the top, because then you've got the easy money if it comes down. If it's right at the bottom, to maybe take that last few rand out of the stock, it's maybe not that wise, because you will take the last few rands, and just as you think, okay, now it's going to go bankrupt, it suddenly rallies. Now, if we look at Goldfields Mohammed, I think our next target, can you believe it? Well, let's see. Well, can you believe it broke that one as well? The next proper target, if it carries on going like it's going now, but I'm a little bit worried. I'm seeing a lamp pull formation here, and this is a weekly chart, so we'll probably see a little bit of a pullback. But if it goes to the top of that head, it will be 87 Rand and 17 cents. And this just tells me that if gold pulls back a little bit, and Goldfields maybe pulls a little bit back, you can easily get back into the share and maybe buy it for the medium to the long term. And remember, medium to a long term in gold shares is sometimes just a 5 or 3 months or 2 months. It's not a case for orphans and widows. So if you want to buy gold, always see you get these beautiful erratic moves, take your profit and go. But I mean, then if you've got a longer term view, then rather, let's say a 2-year view or a 1-year view on gold, then rather accumulate some new gold units. That's maybe a safer or a more conservative option, because with the gold miners, you never know. Sometimes they make money, sometimes they get strikes and all these kind of things. But the chart of Goldfields, as we see it here, is a beautiful chart. And it just shows you, this is a weekly chart. I mean, it breaks this line. It looks very good to me, but I think we're going to see a little bit of a pullback before we maybe head a little bit higher. But what worries me, this chart tells me that the rand can maybe weaken even further, although we hope for a strengthening in the rand over the short term to the medium term.